Very good morning, everyone. Charles here of FRGNT Daily Chart Analysis, Thursday, 13th November 2025, 6:35 in Milano, 5:35 UK pre-London Open. As always, daily chart analysis, e.g., a nice pair to begin with, to provide you with a little bit of transparency in terms of the mindset of a professional trader. So let's take a look first of all, weekly time frame. As always, we are in, and I've said this all week now, a higher time frame weekly order block where predominantly I am looking for shorts. Now you will gauge what I said earlier on in the beginning in terms of the mindset going into trading, e.g., in just a moment. So in terms of high probable areas looking for short positions, we are now in and around the region of a weekly imbalance, which would be a wick bottom right hand corner to take to your attention. We are in this higher time frame order block and we have tapped into a wick that was left behind. Why is that a confidence for me? Well, as you'll hear me say over and over again, that wicks get filled. So with that in mind, we have now filled that wick, and potentially if we do superimpose that wick imbalance over the lower time frames, we'll be looking to see how that aligns with areas on those lower time frames, as I say. So in terms of other areas of confluence, what do we have? Well, as I mentioned, higher time frame, weekly order block, wick imbalance, and if I just press that there, we have now, well, we're approaching or trading towards the previous daily highs. Bring your attention to that center chart, that daily time frame. Now, predominantly, I am looking for shorts. However, what you'll overwhelmingly see in the market is that we are incredibly bullish. Now, let me bring your attention to the 15-minute chart, top right-hand corner, where I was looking for significant breaks of structure before taking shorts. Now, as you can see, I managed to take out partial profits from this before then it came and tapped me out break even. Again, a secondary position yesterday, taking partial profits before then coming back to tap me break even. So the mindset of a trader when trading against structure is of that at this moment. So giving you full transparency is evident, I should say, that I'm trading against structure. However, my bias must remain that I am trading in a higher time frame weekly order block, and my theory, my strategy suggests that at any point in time, providing that we are in an area of interest in the short direction, that there is a high probable chance that price will start to reject and move south. Now, with that said, you can't discredit the fact that we are incredibly bullish. But unfortunately for my strategy, and unfortunately for me, I should say, I simply cannot take long positions. So in terms of how I'm going to approach this, let's just jump over to the 4-hour chart as well. As we can see, price is now broken above that 4-hour 50 EMA and looking to respect it. So we do have some range from those previous daily highs down to the previous daily lows in around that 4-hour 50 EMA before a potential rejection continuation higher high. Now that cannot be hidden. However, as I say, range, what's important there, 38 pips, close to 40 pips, so providing I can get myself in with a good entry and a tight stop loss, I will more than likely be able to take out a 1 to 3, a 3% return on the investment there. And then with that said, we would potentially, if it wasn't for that higher time frame weekly order block that we were in, we would be looking for a long position down at these lows and then around that daily order block, refined down to a 4-hour previously tapped order block. And I can see just here there is an order block right in the equilibrium of that daily time frame order block, so just there like so. So let's put that there and get rid of the one below. So here is an area of which I do foresee price could potentially turn around, if not at the previous daily lows, 4-hour 50 EMA. If that is breached ever so slightly with a candle like so, then we'd be looking for that rejection to push up, close above that 4-hour 50 EMA, and then off it may well go to continue and make a higher high. However, I will not be trading that long position because, as I say, and just to emphasize, we are in that higher time frame weekly order block, meaning that my strategy tells me not to take a long position. So, although I'm predominantly looking for shorts, what am I searching for? So these positions, in hindsight, it looks as if I'm trading against structure, and exactly that is what I'm doing. However, once we do have those snaps, breaks of structure, retest of imbalances, I simply have to keep trading alongside my strategy so long as it makes sense. And until it doesn't make sense, until this weekly order block, for example, is broken on that weekly time frame and a weekly candle has closed above it, I will still be forced to look for short positions. Now, with that said, what am I looking for? So today, very strict criteria. I need the most recent structure point on that 15-minute time frame to be broken down to those lows. So as you can see here, structure has been illustrated via that structure point illustration and a line. Looking for a break of structure on that 15-minute time frame, pull back into imbalance left behind. I'll be looking for a lower time break of structure in and around those previous daily highs to give myself the range. And again, having no expectation for the trade, but simply using the facts, if I'm able to get a nice 7 or 8 pip stop loss down to those 4 hour or that 4 hour 50 EMA, that'll be close to a 5% return. So I'll be looking to take some profits off of that 4 hour 50 EMA and then potentially let the rest of the pennies roll down to this Asia that is still yet to be filled, where, as I said previously, if I were not trading in that higher time frame weekly order block, I'd be looking for long positions. So the position will be closing its entirety down at these lows here. Tokyo to be filled, as you can see by that illustration. Let's bring that across, and then as well as that, let's superimpose that 4 hour 50, that 4 hour order block on all time frames, just so we're fully aware of where price is likely to turn around from. So a potential 1 to 7 is available, but as I said, very strict criteria, because in hindsight, when you're looking back and you're journaling your trades, although it's what the strategy tells you to do, it doesn't look perfect. However, what we can say is in all of these positions, we're able to manage them perfectly, not taking a loss on these positions, going break even when price tells us to do so, and then re-enter again if required, going break even again when price action tells us to do so, when our strategy tells us to do so, locking off at break even, taking some partial. I mean, here, to be honest, it almost got to a 1 to 3, to be fair to myself, but as I say, strict criteria. We take off partial profits, let the rest run off. And again, that secondary entry there, what do we get to? Again, a healthy return for most people, but yeah, partial profits off, attempts to let the rest run in terms of believing that, all right, now could well be the time for the turnover. It wasn't to be. So again, we're looking for exactly the same. Breaks of structure, pull back into imbalance, lower time break of structure again. Ensure that my stop loss can cover those previous daily highs. Of course, there is always a reason to lose, giving no expectation to the trade. We simply trade the strategy in line with what we know works. As you can see, I do the same over and again. If it was a low break of structure, pull back into imbalance here, would be an absolutely fantastic long position. So we see that it works over and over again. So just need to be patient, await that break of structure, pull back and execute that short position. Thank you very much for listening. Let's get on with marking the rest of the charts today, but that is EG on Thursday morning pre-London Open. All the very best. Take care. Charles.